Hey, good morning, everyone. Hope everyone is having a wonderful week. Welcome to yet a new day here at Financial Hub, where we get to break down the markets and see where the markets are going. So far on Monday, I wasn't in for the market breakdown. Ken did it alone. He looked at extensive pairs, which he did a good analysis on them. Today, as usual, we'll just look at a few more, see where market is panning out, see what's happening technically, and then leave the choice to you. Personally, we keep saying we're not here to give you signals. So at the end of the day, we just give you our insights, what we're looking at, the trades I'm having. You manage risk on your own. Make sure you understand that. But here at Financial Hub, we also teach you on how to do that on your own. That's why we have courses and all. But without much say, I'll get straight into the analysis, show you a few things that I'm looking at technically, what I've been analyzing this week, and then we'll get straight into the other things. So I'll do my analysis, then I'll leave the floor to Ken, and then he'll finish it off. So if I share my screen, I'll start with dollar. Dollar massively falling. So we've had a massive bearish run on this one. Okay, so as I always keep saying every time I start the dollar index analysis, so that you can get it deep into your head, I'm normally following the trend, and the trend has been in the bearish side. Okay, so if you want to bet on the bearish side, you can make much more money than the people who are making trying to bet on the catching a bottom on this one. So as you can see, even Ken shared such a pattern. Market has been falling to the downside, lower lows, lower highs, and now currently what I'm watching is this pattern that's forming. So this is the daily time frame. Okay, so massive bearish momentum. Okay, so I'll break down this level that you're seeing here. It's better seen on the 4-hour, but ever since we got that break, remember what I keep saying whenever I'm trying to analyze the market, whenever I'm breaking down the market. Once we break a major level with a strong bearish or bullish candlestick, you really don't want to bet against it, and that's what we got on this one. Looking at this daily close, okay, so what happened over here? Market was falling further down. So people who normally say I normally trade the gaps, waiting to close the gaps, I'm sure over here you really waited for that, and if you tried buying that, you really got squeezed out. We stopped doing this about 2-3 years ago. We never ever trade a gap like that, saying a gap must close. So what happened over here? Ever since this bullish bearish momentum started, we went down, sort of market came and dangled around here, and then we got this strong break to the downside. So once you get such a break with this previous key level, looking at it, you can see that resistance was strongly broken to the upside. Just what I'm talking about. You don't want to be against that break at that time until it goes back below. You can see we had this massive support over here, market supporting once, twice, and then we got this strong breakout. Market was now acting as a resistance once and twice, and market has been falling. So if I go the 4-hour chart, just to show you clearly, so it was this level that I've highlighted in blue over here. So you can see very strong support, acted the support here. Once we got that breakout, very strong resistance level, and market has been dropping further down. So as it's been dropping, also a pattern has been forming that I'm normally watching under the market structure strategy. The strategy that I use is sort of this a wedge like pattern. Okay, so market has been coming, falling. We got that bounce of here, we've gotten a support level at this region. If you zoom it out, you want to see this was the previous level where market got strong resistance and rallied further higher. Okay, so you can see that level, that was around, I think, February, March over there. We got this strong support, market rallied all the way higher. So I expect unless we break it strongly as well, what I was talking about, we get such a break like this. If we are not able to get that strong breakout, expect some correction to come back in, maybe even to back to this level. Okay, maybe you can get some correction back to this support level, I mean resistance level. If I draw so one sec, so you can get some correction back to this level. Okay, back to this resistance, especially if we break this counter trend line, or rather this trend line that we're having, the upper trend side of this wedge like pattern. So if you get that break to the upside, I can be expecting some correction to this level. Okay, so I'll be watching this level massively, because what does that mean to my pairs? I trade mostly major pairs. That would be mainly meaning some bearish correction on gold after having that massive run, some bearish correction on Aussie Dollar as well, which I'll show you, and some correction on USD CAD, which market has really been in a downtrend. I think one way or another we're going to get that correction. So this is what I'm watching on dollar index. Okay, so mind you, I'm never really fixed on a certain bias. If you get that strong breakout, then you don't want to be betting against this pair. Okay, so with that said, I'll go down to Aussie dollar. Okay, so Aussie dollar, what are we forming? Some very bearish correction pattern that's forming. If I got the 1 day, remember I've been telling you I've been very bullish on this one, but there's some pattern that's forming that you cannot ignore. Okay, so if you look at long-term time frame, we've been having this trend line. Remember, I'm never really fixed on a trend line not being able to break. The trend line is not what's holding the market. What's holding the market is some fundamental factors that's driving the market behind it. So you have to do a lot of research and see what's happening fundamentally. A trend line can be broken, but long term we can continue to the upside. So what am I paying attention to now? I think there's something that you need to really pay attention. I remember last week I had some long positions which I came out. Okay, once we got this breakout to the upside, once we broke back in, I came out of that trade. So I haven't been holding it. I came out, decided to sit out and watch what the market is doing. Why is that so? You see this red candlestick that we had this strong breakout, so I was very bullish at that moment, but market sentiment changed in 2 days. What happened next? We got this sort of shooting star formation followed by this candlestick we call, some people I think call it a spinning top. Okay, so we got that next and followed by a very strong bearish candlestick. So once we have such, I never really want to be against that trend. Okay, so once we got that break, remember I'm very bullish. I was saying I was very bullish to the upside, but there can be some dollar correction coming in. You see this level where market has rejected yesterday. Okay, it was this very strong significant resistance level, and that's where market has broken back and retested. I can expect some downward momentum to come in, and if we get that downward momentum, do not be surprised if market breaks out of this trend line. Okay, remember the trend line can be broken, but the formation of higher highs, higher low might still hold. Okay, this was my previous higher low at this level. Okay, so before we got that strong bullish momentum, this was my previous higher low. So unless we break this level and really go below it, is when I can change my bias into bearish territory. But before that, this trend line can be broken. We can come back to these regions down here, maybe even get some support at this previous resistance. Okay, so I'm normally looking for this liquidity strong levels. Okay, maybe even can get some push to this level. So if I go down to the 4-hour chart to show you clearly what I'm talking about, so if you zoom it in and see what's happening currently, okay, you see this level sort of, if you look at it from a different angle, okay, if you're not looking at it from a from a bullish point of view, what you can clearly see is that we had some impulse over here, market moved to the downside, we got this correction over here. You can take this as a correction, as a flag formation, impulse, a correction to the upside, sort of nearing the 78.6 level. Okay, so to just within that region of the 78.6, which market really held, and we got that strong bearish momentum to the downside. So if I zoom it further in, you can see market has come to this level, come back below this resistance level, now acting as a resistance. It was a support, now acting as resistance. Yesterday, or rather this week, we've gotten some correction back to the 61.8. So I have another Fibonacci drawn from this level, so drawn from this top all the way to this. So taking this as my impulse, so this was my 1, this was my 0 down here. We got this 61.8 Fibonacci correction level, which held the market. Same thing happened within this one, impulse, a correction within a flag formation which can hold. I expect this market to continue moving further down, and that's what has been happening since yesterday. So do not be surprised with this one. This can also be, some people can take it as a head and shoulder formation. So if you trade such patterns, this can be basically the right shoulder formation on this side, taking that as a head, impulse back to the downside, the neck was this level, and some impulse again acting as resistance there. So long term, I'm still watching this one. I can expect some correction to come in, especially if that dollar strength comes in. Expect some correction on this one. So that's what I have on Aussie dollar. If I look at gold, can normally analyze this pair a lot, but I can show you what I'm looking at using the MSS strategy. So using my daily time frame, market really rallied way higher. So there are two levels I'm watching. If I use this trend line as that level, or if I take the top of my week, okay, the top of my week, market still broke it, and over here had that strong bullish correction, bullish breakout to the upside, that bullish candle that you're looking over here, okay? And ever since we had this bullish run, I don't think we've had any major correction over here. Looking at this push to the upside, remember this is a commodity. You never expect all the time market to have that strong correction. The market can really follow the trend because it's mainly driven by supply and demand, and right now you can find that the demand on this is quite high on it. So if I go down the forward chart, just a pattern I'm looking at, I use a lot of Elliott wave analysis, so just a breakdown to help me analyze the market a bit more clearly. You can see there's this pattern that has been forming. Market has been rejecting this upper side. You can see this first touch, second touch, third touch over here, and an extra fourth touch over there. If I use my Elliott wave analysis, basically what I'm looking at, this was my first impulse, then we got into this third wave, forming that 1 2 3 4 5, okay? And over here we're getting some support, some resistance at this level. So do not be surprised if you see some momentum coming to this one, maybe to push us back either to this previous resistance level, which was last week's high, or back down to this trend line level, okay? That's what I'll be watching for now on gold. Some correction, expect some correction. If I go to the 1 hour chart, I have a different sort of trend line, okay? So I have a trend line taking this previous starting from around here. So there you go. So you can see this level starting from the 1725 level. I have another trend line starting there. You can see that first touch over here, second touch, and market has gone further up. So if market is able to create some pattern over here, I'm watching to see maybe an ending wedge can be forming over here. So I'm still watching. All this can still up for adjustments. If market forms new highs or continues to the upside, I'll still be watching, okay? But I want to see if market can come back and retest maybe last week's high, which was broken earlier this week on Monday. Market hasn't really corrected ever since, but we've had this slowdown in momentum at this top level, okay? Sort of forming a sideways movement. So if you expand it, maybe take a look at the ranging level, okay? So you can see up here, there's a level that has been retested 3 times. You can see that 3 times over here. You also want to look at the downward side, okay? So you sort of have that ranging level. You want to see that pattern. If market is able to get a strong breakout to the downside, then I'll be watching for that correction to come in. So that's my bias on gold, okay? Especially the forward chart is what is really guiding me. So I want to see what will happen after this level. Normally when we normally see a lot of correction or sideways movement on Monday and Tuesday, expect Wednesday or Thursday a lot of momentum to come in. Sometimes it's normally fundamentally driven, sometimes it's just technically driven in, okay? So that's what I'm watching on gold. Maybe if I do my last one, then I leave the floor to Ken. Looking at USD card, 1-day charts, long-term bearish pattern, okay? So look at this bearish pattern, almost just looking at like the the wedge pattern that I've drawn on the dollar, okay? But now this one is on USD card. So what I can be looking at if I take this as my level, so very crucial, very clean analysis, I think, okay? So I have 2 biases. One, I had this, if I duplicate this upline, okay, and take this bottom like this. So if I take that, it means there's still a lot of downward, and I get rid of this. So looking at this channel like formation, if I take it like that, taking this as my first touch, maybe here second touch, looking for a third touch is still quite there's still some room for that. But if yesterday when I was analyzing, I tried to adjust just to try and see it from a different angle. And what I took now, I sort of tried to adjust. So these lines are not parallel. This is sort of like a wedge like pattern. So I took this bottom over here, adjusting that to this down level. You can see that it's forming another touch down here, which can quite explain some momentum can come in because it's aligned with the dollar. So I was analyzing the dollar showed me that there might be some correction. So I came to this one, tried to do some intensive analysis on it, and that's what I was saying. There can be also some correction, taking this as my lower boundary of this sort of wedge-like pattern. So we can see it's something that I'm paying attention to, always paying attention to if I'm able to zoom it. This level that was spiked, okay? So you want to do a lot of price action analysis, okay? This is the level that I'm watching. The market came and spiked this level. I normally call it here, it can spike retest. So market comes, sort of spike, sort of gets some momentum to the upside, comes back again and sort of retest that level, but unable to close below it. So that's what happened yesterday. We had that strong bearish momentum, then a lot of rejection back to the upside. And if I go down the 4-hour chart, you can see that it was sort of this level. Okay, let me zoom it in. So over here you can see I don't have many trend lines, that I haven't gone down to the 4-hour really to do a lot of analysis, because I'm not trying to catch a bottom on this one, but I'm really paying attention to the patterns that's forming. So we sort of had this touch over here, market corrected, a break to the downside, a quick rejection back in, and you're seeing market is trying and still staying above this level. So pay a lot of attention to that. That's what I'm watching on this pair, after having this massive momentum to the downside without any significant correction. Okay, so that's it from me. Of course I do other pairs. I normally look at 4 pairs. So I've done dollar index, Aussie dollar, USD CAD, and gold. I normally do Dow Jones as well. I'll leave that to Ken, but that's something else also. Normally analyzing, always looking to bet in the direction of that Dow Jones trend. So normally looking to bet in the capitalism of America, betting in that direction, that things will be getting better in the long term. But of course along the way some corrections happen, just like what we're seeing on cryptocurrencies, and we're just discussing it with Ken earlier today morning. Of course technically we had to get some correction. Of course that had to come in, and people who don't understand that, some people we talk to over the phone, just giving them some advice here and there, keep saying I'm buying this right now. We're asking them, where's your target? They say I'm targeting the moon. You're like, what target is that? Doesn't really make sense. They just want to participate in this. Some people called us just a few weeks ago, yo, Doge has been rising higher, we want to buy into it. Bro, you don't understand what you're buying. You don't understand what Dogecoin is doing. I posted on my IG the other time that this will end in tears. Some people don't understand that. So I sat down and did some analysis, looking at Doge, reading some information that was released the other day. Bro, the people who even started that thing, the founders, came out of it way back in 2016, I believe, because they had started that thing as a fad. Okay, they were just doing it was just as a parody of Bitcoin. They came out a long time ago. So understand what you're getting into. Dogecoin is the highest this year to date. Is the one that has gained the most, but it's the one that has the least utility. Just basically telling you that this is a lot of FOMO, that people are just getting into it because of fear of missing out, fear of making a quick buck here and there. If you do that, my friend, that will end in tears. So I see someone asking if you can do a BTC analysis. Maybe I'll leave that to Ken. Can you do it, or I look at it? Ken will look at it. So Ken will do for you. Then I think we'll end it there. So let me not waste time. Let me leave the floor to Ken so that he can have time to do the analysis. And we'll post this video on YouTube, so you'll have it there if you want to rewatch it there. But please, my advice to you guys is, if you want to do anything, if you want to buy Bitcoin and all those things, do some research on it, understand it. I said the other day that I'd written a short breakdown of where Bitcoin came, as I got that from the book Bitcoin by Dominic Frisby. Then I read all of it and did a summary. So if you want that PDF, you can always text me. I can send you a PDF so that you can understand Bitcoin. It's simple, quite easy to understand, not really the complicated part of it, just the history of where it came from. So that's it from me. See you guys soon. Let me leave the floor to Ken.
Hi guys, Caleb has actually done much of the work. So for me, I think I'll first start off by executing a trade. So I wanted to jump on one trade, but I couldn't. So I'll jump on it now, then I'll start my analysis and I'll show you the trade that I was taking. But anyway, hopefully you're well, you're having a wonderful time, you're enjoying trading markets or learning how to trade, if that's your objective, and having fun. So let me just set my target. Okay, I'm done. So I'll start off with gold. I think Caleb has shared actually a very beautiful analysis on gold. Personally, I had the insight, I had the same insight, the same breakdown, but it was not based on what he's spoken about or what he's shown you guys. So I'll show you my outlook. I've actually taken a trade on gold. So I'm short on gold, expecting a correction to 1847. Risk reward makes a lot of sense, about 1:2.67. So it doesn't make any sense to me to be out of that market. So I'll just share my screen. I'll go through gold, I'll go through Dow Jones, and then I think I'll clear up with Gbp Usd and finally look at Bitcoin. So yep, hopefully you can all see my screen now. Anyway, starting off with gold on the daily chart, I think you can see clearly now we've gotten an official breakout out of this line. Now it's a very tricky scenario here. Are we getting a long-term correction? Because you can see clearly we've gotten almost 1,000, not even 1,000, about 2,000 pip move from when we bottomed at the 1675 level. We've now rallied all the way to 1875, 1880 level. Are we getting a big correction? We could see 1,000 pip correction. I think it's very right for us to assume we could even see a correction to 1780. I wouldn't be surprised if something of the sort happened, but there are levels that we'll be watching in the direction of the trend if that's the case. So if I go down to the 4-hour chart, Caleb has done a very good breakdown. Personally, I'm not watching much. I'm just watching first of all this trend line. On the lower time frames, on the hourly, that's where I've executed my trade. I'm looking for a minor correction back to 1845, and I'll be out of this market, expecting another entry if we see a breakout of this line and a retest. Probably we'll see how the correction pans out. But if I go down to the weekly chart, if I just look at it from a weekly scenario, I don't think we could see a retest of this level, 1800, 1807. So I think there's a high chance you could see a move lower also. So I'm short on gold, at least for the short term, but long term I'm still looking for long positions. And even if you look at my risk reward ratios and my position sizing, clearly I'm taking very small positions when I'm betting against the trend, but I'll be willing to take higher or bigger position sizes when I'm betting in the direction of the trend. Going back to the Dow. On Monday when I was looking at the Dow, I expected a move higher, and we got a close suggesting that on Monday. But yesterday we saw some move lower, and I think I understood why the move lower developed. So I'm very keen on this daily chart, first of all, to watch if we'll get a breakout out of this beautiful channel. So will we get a breakout out of this central pivot level, or the 33,500 level, 33,600 level? On the 4-hour chart, if I just go down to the 4-hour chart, I have this beautiful wedge-like formation. So it was broken last week, and then you got a retest. Clearly this was a very good short signal. If this pattern is to play out like we expect, I think it's only right to assume that this is a Fibonacci, and you could see a move back lower to 32,000, 33,000, 32,500, all the way to 32,000. But that's a long-term stretch. So currently I'm not holding any position in this market. I'm actually out of it, but I'm watching what will happen. Gbp Usd, on Monday I said this was one of my favorite trades. Took off very well, made some money out of it, liquidated that position yesterday, waiting for another possible entry today or tomorrow early in the morning. And let me just start off with the daily chart. So on the daily chart, clearly yes, we are above a 3, but for me I don't think this is a limitation. I feel like, okay, this is a selling point, but if I look at markets from a long-term perspective, I think these markets have a high chance of moving all the way back to these levels, about 1.47, 1.5. However, the timing is also very critical. If I go down to the 4-hour chart, we are watching this beautiful channel formation. So first bounce, second bounce, now we've gotten the third bounce. The question is, are we getting a deep pullback or it's a minor pullback? If I go down to the hourly chart, I'm watching this pattern formation. So I've been trading markets using my own system for a very long time, and I think I've observed some patterns play out very many times. One of the patterns I've observed is when you get a breakout from the central pivot to rally all the way to R2, there's a high chance you'll get a correction back to R1 or a minor break of R1. So if this market holds back at R1 or a minor break of R1 and comes back above R1, then I'd be very willing to buy this market, expecting a rally all the way to the R3 level. But if you see some momentum, some strong momentum, I don't get the signal that I'm looking for at this level, then I'll stay out of this market. And that's also why I liquidated my position at this level. Immediately I saw the markets are rejecting this level. To me it was basically should be out, waiting for a correction and probably another entry. Initially I used to scale in, so instead of getting out I'd wait for this correction, then I'd put in another position. But over the years I've learned that that's more risky than staying out then coming back, which is quite less riskier, because if the markets don't give you a signal, then you are not out and you have not given back up your profits. But if the markets give you a signal, then you get your cake and you have to eat it too. So it's a better trade-off, unlike staying out of the unlike being in the market where you're risking your profits and you're risking also missing out on the opportunity or taking the wrong trade and actually ending up losing both your profits and a new position now. So that comes from experience again. I don't think that's something that you learn somewhere else other than your own personal trading. And I also don't think that you can try to trade like I do, like I've always insisted. So you have to come up with your own philosophies or your own ways of looking at markets. So I'll go down now to do BTC. So someone requested to look at BTC. I was actually telling Caleb I think BTC is at a very good buy position. If I just go down to the daily chart, personally I feel like this is a correction for this bull move. So if you look at markets, how markets work technically, I think it's only right first of all to measure using your Fibonacci tool. This was the last prior higher low. We had a move all the way to 42,000, a correction to the 50% retracement, a move to the 61.8 fib extension. We got into a wedge-like formation. A break of the wedge-like formation resulted into the formation of a Gatli pattern. And if I just look at the Gatli pattern, you can see clearly we've gotten this move down lower, and now we're trading at the 40,000 level. Therefore, I think there's a high chance you could see this markets bounce off the 40,000 level, 78.6 fib, and you could see a big rally to 75,000, 88,000. I'm still very bullish on Bitcoin. I think all the way to about 100,000. There are no fundamentals that have changed to change the direction of these markets, and if you understand markets, you'll understand that the fundamentals equate to the direction of the trend. So that's my outlook on BTC. I think it's a very good buy at the moment. You can make double your cash. If you have $1 million, you can make 2. If you have 100,000, you can make 200 by just taking this bet. And I think the risk reward is actually skewed to your favor, because if you just buy at 40,000 with your stop losses coming in at 30,000, 28,000, and your targets coming in at 80,000, the risk reward will be something like 1:4 or 1:3. I think if you just try and look at the long position from that level, and you're aiming probably to target this level as your conservative target and this level as your final target, then you'll have a risk reward of about 1:4. That's a very risky trade, but who said trading is not risky? So that's it. I think I'll stop there. If there's any question, I'll try and answer. If there's no question, I will wish you the best in your trading. So someone is saying Euro GBP. Unfortunately, we don't look at all the pairs. So if I just try to, I can break down that market, and there's a high chance I'll be right on the direction of the trend. But there are very many things which I won't be right on. For example, I don't know the levels I should be watching on that pair. I'm really keen on levels on my way of trading. I'm not aware the last 3-4 months how that market has been trading. Has it been trending upwards, downwards? Has it been moving sideways? So you really need to be trading minimal pairs for you to understand how they move, and for you to be able to tell, okay, we're moving from trending to ranging, ranging to trending, trending to reversals. You really need to come up with all those things for you to make sound decisions in the market. So that's why I won't look at Euro GBP, unfortunately. Trust in your judgment. I think if you can trust in your judgment, you can make some money in the market. Someone else is asking, do you expect a correction on GEU? GEU, yeah, I was looking for correction to 1.4150, 1.41. I think if we have a deep correction, those are the levels I'm watching. And if we get to that level, then I think there's a high chance you could see a bounce off that level and a rally to 1.35. But I'll first wait for the signal. This is an opinion. The opinion has to be confirmed by a signal. So I think I'll stop there. I can't see any other question. I have some other things to do. All the best in your trading, and may the pips be with you. Hallelujah.